What if I told you there's a publicly traded company sitting on nearly 5% of the entire global supply of Ethereum, trading at a discount to its actual net asset value, while short sellers are actively trapping themselves in a ticking time bomb short squeeze? If you clicked on this video because you saw Bitmine and thought the short sellers are running out of time, you are absolutely right. And by the end of this breakdown, you will understand exactly why their clock is almost up. That company is Bitmine Immersion Technologies, trading under ticker BMNR. Just 1 week ago, on July 31st, we published a technical blueprint outlining exactly where this stock would find its floor and where it would face resistance. And over the last 7 days, the market didn't just validate our technical model, it followed our script almost to the absolute penny. But while the short-term chart looks spectacular, there is a hidden structural catalyst operating behind the scenes that is quietly suffocating the supply of shares in the open market, setting up a coiled spring that could launch this stock way past its historical highs. If you are holding BMNR, or if you have been waiting on the sidelines for the perfect entry point, you cannot afford to miss this update. If this kind of deep dive analysis helps you make smarter investment decisions, do me a quick favor and tap that like button and subscribe to the channel so you never miss an update like this one. Now, before we dissect the multi-billion-dollar balance sheet, let's take a look at the high-level dashboard of what is actually driving this stock right now. To understand the BMNR opportunity, we have to look at the 4 pillars that define its current investment thesis. First, we have technical momentum. The stock has officially confirmed a bullish breakout, clearing heavy overhead options resistance at $18.31 and culminating in a spectacular pre-market gap up to $19.30. Second, the asset base. Bitmine is no longer just a speculative mining business, it is a digital asset colossus holding an $11.3 billion gross treasury. Yet it trades at a massive price-to-book discount of just 0.9 times. Third, the revenue engine. Through its proprietary Maven platform, the company is generating a massive $247 million in annualized staking yield, completely neutralizing its corporate cash burn and preferred dividend obligations. And fourth, Wall Street consensus has officially rated BMNR as a unified strong buy, with price targets implying an asymmetric 69.88% upside from today's levels. Now, to understand how we reached this breakout, we have to look back at the exact price levels we mapped out in our last video. Let's talk about a major victory for our community. On July 31st, we mapped out a tight technical channel and identified a highly reliable, rock-solid support floor between $15.50 and $16.50. We specifically advised tactical swing traders to look for entry points near the 50-day simple moving average, which was sitting at $16.59. Look at what actually happened next. On Friday, July 31st, the stock opened at $17.76, faced heavy profit-taking, and washed out weak hands to bottom at an intraday low of exactly $16.52 before rebounding. Then on Monday, August 3rd, BMNR gapped down under broader crypto sector pressure, sliding over 2% at the open to hit an intraday low of exactly $16.63. Once again, the 50-day simple moving average held like steel. Dip buyers who had their limit orders set in our support zone secured the absolute bottom of the week before the stock turned around and closed higher. But while our support model held up flawlessly, the upper boundary of our trade setup did something completely unexpected. Now let's address the deviation. In our July 31st video, we noted heavy overhead options resistance around $18 and recommended that short-term traders take profits between $18 and $18.31, which represented the upper Bollinger Band limit. We expected the stock to hit a technical wall and pull back. Instead, BMNR consolidated for a mere moment and staged an explosive multi-day breakout. On Tuesday, August 4th, the price sliced through the ceiling, touching an intraday high of $18.19 and closing above resistance at $18.10. By Wednesday, the breakout expanded on massive volume to close at $18.43. And today, August 7th, the momentum culminated in a spectacular pre-market gap up, pushing the stock to a fresh weekly high of $19.31. This technical deviation is highly significant because the old resistance ceiling has officially flipped into a rock-solid support floor. So what was the high-octane fuel that completely vaporized this technical resistance level? It was a perfect storm of 3 structural and macroeconomic catalysts. This breakout was not a fluke. It was driven by a perfect convergence of corporate, institutional, and macroeconomic events. On the corporate side, we are witnessing violent float suffocation as management aggressively retires shares under its buyback program. On the institutional side, BMNR's final inclusion in the Russell 1000 and Russell 3000 indexes went live, forcing passive index tracking funds to buy millions of shares regardless of price. And on the macro side, we got a shocking U.S. labor report today showing non-farm payrolls unexpectedly shed 23,000 jobs in July. While this is bad news for the general economy, it immediately drove bond yields lower as the market began pricing in aggressive Federal Reserve interest rate cuts. This triggered a massive risk-on rotation, acting as rocket propellant for high-beta digital asset equities like BMNR. Let's zoom in on the corporate buyback engine first, because management is quietly creating a massive supply vacuum. If you have followed this stock for a while, you know BMNR historically suffered from heavy dilution, with its outstanding share count expanding from 232 million to over 600 million. But that era is officially over. On August 3rd, the company's weekly operational update revealed that Bitmine repurchased an additional 4.5 million shares in the last week alone under its massive $4 billion buyback program. This marks the third consecutive week of aggressive share retirements, bringing the total to 16.1 million shares permanently retired since July 1st. By aggressively shrinking the outstanding share count, management is reducing the mathematical denominator of the stock. Every remaining share of BMNR you hold now represents a definitively larger slice of the underlying multi-billion-dollar Ethereum treasury. And when we unpack the sheer scale of that multi-billion-dollar treasury, you will see why shrinking the share count is so incredibly powerful. Bitmine has successfully completed its transformation from a speculative mining operation into an institutional-grade digital asset powerhouse. As of its August 2nd operational update, the company holds an astonishing $11.3 billion in gross assets. Let's look at what is actually backing your shares. The Treasury holds 5,797,813 Ethereum tokens, valued at $10.9 billion, based on an $1,880 spot price. This represents 4.8% of the entire global circulating supply of Ethereum. They are 96% of the way to their alchemy of 5% goal. On top of that, they hold 209 Bitcoin, $173 million in cash, a $180 million stake in Beast Industries, and a $61 million investment in ACO Holdings, which gives BMNR single-ticker indirect exposure to OpenAI's private equity and WorldCoin. So how much is this mountain of premier assets actually worth to you as a shareholder? This is where the fundamental value proposition of BMNR becomes absolutely undeniable. At today's trading levels around $18.80, Bitmine's total market capitalization sits right at $11.32 billion. This means BMNR is trading at a price-to-book ratio of just 0.9 times. Let's put that into perspective. Broader software companies trade at an average price-to-book of 3 times, and BMNR's direct digital asset competitors trade at an average of 6.3 times book value. When you buy BMNR today, you are acquiring a premier, institutionally backed Ethereum portfolio at a 10% discount to its net asset value while getting their cash, their venture capital stakes in Beast Industries, and their OpenAI exposed equity stakes completely for free. But wait a second, isn't there a major catch? What about the massive preferred dividend liability that threatened to burn through their cash? Historically, BMNR faced a serious cash burn risk due to its 3.5 million perpetual preferred shares, trading under ticker BMNP. These shares carry a 9.5% cumulative dividend rate on a $350 million liquidation preference. This translates to a senior $40 million annual dividend obligation senior to common stock. But management did not just sit on their hands. They transitioned their balance sheet into a hyper-efficient yield generator. Bitmine deployed 4.91 million Ethereum tokens, 85% of its entire treasury, into native staking protocols via its proprietary Maven platform. This staking engine produces a 2.67% annualized yield, which generates $247 million in annualized recurring revenue. This massive cash stream completely intercepts and neutralizes the $40 million preferred dividend obligation, leaving over $200 million in pure free cash flow to fund operations and retire more common stock. With their cash burn completely neutralized and cash flows surging, is it any wonder that the smart money on Wall Street is aggressively hoarding shares? The latest regulatory filings confirm that institutional smart money is backing up the truck at these price levels. Weiss Asset Management increased its BMNR holdings by an astronomical 363.6%, adding over 3.39 million shares to its portfolio. Bank of New York Mellon boosted its position by 36%, now holding over 346,000 shares. Militia Capital Management initiated a brand new position of 82,000 shares, while flagship pensions like CalPERS have established a $1.47 million position. Even Cathie Wood's ARK Invest maintains a highly concentrated position, publicly calling Bitmine's Ethereum treasury strategy an exponential opportunity. This is the ultimate institutional stamp of approval. But these massive institutional buyers are not just looking for passive staking yield. They have realized that the combination of these buybacks and short sellers has set up a massive coiled spring. Now here is where things get truly dangerous for the bears. While BMNR's high average daily volume of nearly $600 million reduces the likelihood of a standard retail short squeeze, the stock is currently primed for a highly explosive structural supply-demand squeeze. According to the latest short interest data, BMNR has a massive 49.12 million shares sold short, representing over 8% of the public float with $776 million in short dollar volume. Because the days-to-cover ratio is extremely tight at just 1.4 days, short sellers have virtually zero room to breathe. When you overlay these short obligations with the forced, price-insensitive buying from index tracking funds and the corporate buyback machine retiring millions of shares weekly, you get a float that is effectively suffocated. Any bullish push in Ethereum's spot price will force short sellers into a highly compressed buying window, sparking a self-reinforcing buying panic. What happens when 49 million shares need to cover and there is simply no supply left to absorb them? So where does Wall Street think this stock is ultimately headed once this coiled spring finally snaps? Wall Street analysts who cover BMNR are unanimously bullish, carrying a unified strong buy rating across all tracking data. The consensus average price target sits at $31.87, implying a massive 69.88% upside from today's price. Looking at individual analyst calls, Gareth Gazzetta over at Cantor Fitzgerald maintains an overweight rating with a price target of $30.30. Meanwhile, Fedor Shabalin at B. Riley Financial holds a buy rating with a target of $25. And remember, these price targets are highly conservative because they are based entirely on BMNR's existing balance sheet, assuming no further growth in the underlying assets. But what if the broader crypto market experiences its own massive technical breakout? That is where the asset valuation scales exponentially. If we look at the macro picture, the upside potential for BMNR is directly leveraged to the price of Ethereum. The company's technical advisor, Tom DeMark of DeMark Analytics, recently highlighted a compelling technical analog comparing Ethereum to the 1987 S&P 500. According to his model, Ethereum is on track to clear key technical resistance levels at $2,000 and $2,500. If spot Ethereum successfully clears these targets, Bitmine's gross asset value scales exponentially. This would force a rapid closure of the stock's current price-to-book discount and serve as a massive launchpad, pushing BMNR far past Wall Street's $30 price targets. Could we be looking at a scenario where this stock doubles and the analysts are forced to revise their targets upward just to keep pace with reality? So how should you play this technical breakout? Let's break down the step-by-step game plan for both short-term swing traders and long-term investors. Because BMNR exhibits high intraday volatility with a beta ranging from 1.3 to 1.67, your strategy must depend on your time horizon. For tactical swing traders, you must avoid chasing the stock at overbought levels. Treat the old $18 resistance zone as your new support floor. Look to buy shallow dips near this breakout zone or closer to the rising 20-day simple moving average around $15.49. Make sure to implement strict stop losses to protect your capital against sudden crypto whipsaws. But for long-term strategic investors, the game plan is simple. Strong accumulate and buy. Ignore the daily technical noise. The structural floor of this company is firmly secured as long as spot Ethereum trades comfortably above the $1,200 to $1,400 range. With the buyback engine shrinking the float and the staking engine generating massive cash flow, this is the ultimate public vehicle for high-leverage Ethereum exposure. When we connect all of these fundamental, technical, and structural dots, we arrive at one definitive conclusion. With an $11.3 billion asset base, a $247 million recurring cash engine, and a rapidly suffocating share supply, BMNR offers an incredibly rare combination of asymmetric upside and a rock-solid margin of safety. The short sellers are trapped, the institutions are loading, and the catalysts are stacking. The question is no longer whether this stock re-rates higher, but how fast it gets there once the spring finally snaps. Now, before I let you go, I need to be crystal clear about something. Nothing in this video constitutes financial advice. I am not a licensed financial advisor, and this content is for educational and entertainment purposes only. Always do your own due diligence, consult with a qualified financial professional before making any investment decisions, and never invest more than you can afford to lose. Markets are inherently risky, and past performance does not guarantee future results. With that said, I want to hear from you. If you are holding BMNR right now, what is your personal price target, and what would it take for you to start trimming your position? Drop your answer in the comments below, because I read every single one. If this analysis brought you value today, smash that like button, subscribe to the channel, and hit the notification bell so you are first in line when the next update drops.